Hello, my name's Craig Earlham, Senior Market Analyst at Oanda, and today we're going to talk about Euro Sterling. Two really interesting currencies right now, one for obvious reasons being the impact that we're seeing from these Brexit negotiations, the ongoing debates that we're seeing in Parliament, the fact that at the moment Parliament is struggling to converge around one particular option, and in particular not Theresa May's deal. In recent days it looks like she's made some headway in that some of the ERG and some of the more hardline Brexiteers within her party have started to suggest that in the event of a third vote they would consider backing her deal. The flip side of that is she has lost control of Parliament for a day so that MPs can discuss other alternative options and see if they can converge around another option that's potentially on the table, although again there's no guarantee that this is something that the EU will agree to. On the other side of the coin you've got the euro. Now the euro is looking quite weak at the moment, and the primary reason for that is because we have seen a significant slowdown in the European economy. And this was really highlighted on Friday when we saw a strong sell-off in the euro on the back of some German manufacturing data. Now the manufacturing PMI, not always the most closely watched indicator, it's safe to say. These PMIs do give a relatively reliable forward look at a sector, but they can be quite volatile. However, the fact that we saw such a significant miss and it falls so deep into contraction territory, the indicator falling to just above 44, which is the lowest in 6.5 years, did spook the market. And I'm not just talking the euro actually in this instance. We saw equity markets tumbling, we saw US futures tumbling. So this was a much wider spread reaction to one piece of data that doesn't always necessarily attract so much attention. And it was because of what created such a poor number. It was the fact that I think the issues that it was attributed to, like the US-China trade war, like a slowdown in the Chinese economy, like Brexit, a slowdown in the automotive sector, which is partially linked to Chinese purchases. Again, all of these things, while they've been highlighted in this German manufacturing PMI, these are all global issues, and global issues which we've known about, but we're still waiting to see evidence of actually having severe negative economic implications. Clearly we've already seen a slowdown, and clearly central banks have responded in kind, but when we start to see such clear evidence here of it having a significant impact, then it does typically spook the market. So we saw the euro actually come off quite a bit on the back of that data. This continues the general trend which we've also seen in the euro. So we've got a pound which has been strengthening over time as it's become clear that no deal is less likely to happen, and a euro which has been weakening during the same period, taking us back into these levels. We broke below multi-month lows a few weeks ago, and we've entered into a new range. In terms of where we are now, we're back around these kind of 85 levels. Above us, we've got the 86.50 to 87 region. That was long-term support, which we actually broke below a few weeks ago. And below us, we've got these kind of 83 to 84 levels, which again is even longer-term support. So this is the new range which we now find our way in. But what's important here is momentum is very much with the bears. And the closer we get to getting a Brexit deal over the line, assuming that's what we're going to see, then the more we could potentially, if this trend continues, see that 83 to 84 level come under pressure. Of course, if these Brexit negotiations take a turn for the worse and no deal starts to become an increasing possibility, then it could actually be negative for the pound and actually look to support this pair, potentially change the trend, at which point we're looking at those kind of 80, 650, 87 levels, which is previous long-term support, more recently resistance to break. And if they do break, then that again is a very bullish signal.